Yo, what's up, everybody? Good morning. Let's get ready to get started. We'll skip the intro here. A little late start here. How are y'all today? Get prepped and ready to go. Boom, 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 boom. All right, almost CD band tap on NASDAQ. Kind of a little caution today. I think today is going to be like a small internal day thing. I might be able to scalp 10 points out of this. I'll be happy if I get it. Morning, morning, morning. Everybody, don't forget to hit the thumbs up button there below the stream. All right. Let me know if you guys can hear that podcast that I'm on in the background. Turn it down a little bit. All right, let's read the news today. So we have going on here. Anything crazy going on? Wednesday is going to be a decently sized. Wednesday's the Tesla, AT&T, a couple other earnings. So earnings season full force right now. Gonna creating some movement. 1 minute till market opens. Visa, that'll be a big one Thursday. Today, nothing really. Nothing too crazy. This week, PMI on Wednesday. Thursday is going to be a huge day. GDP coming out Thursday. New home sales Thursday. So Wednesday, Thursday going to be big movers. Today is probably going to be mild. What's up, you guys? Don't forget to hit the thumbs up button below the stream before we get started here, guys. I love y'all. Market up and get ready to run. Went up, Brazilian's doing well. Markets are gapping up. We have about 16 points in the S&P, about 100 points on NASDAQ, and about 20 points on the Russell opening up. NASDAQ's the first one to get close to DD band right here on the top. NASDAQ got within an inch of tapping and turned around. No alarm yet, so it's still looking good. All right, we're doing the gap and go on the open side here. We are a gap of about 15 points here in the S&P, so fired a long off of the mode 2 resilience. I'm definitely going to long off of half gap already. So where we are right here, let's put something small. $80 is really high. Something really small. I'm along here and here to go to DD. Let's see if I can get something like that. Perfect. Perfect. This is all we want to see, a golden belong up setup. This is perfect setup, guys. Or not perfect setup, but like manageable setup. Here to DD. Oops, that's the too big of a dot there. All right, let's go. Ready? Oh, my tablet's turned on. Gotta redid that. Okay. Yeah. Oh, slightly less shitty handwriting. So I've got 1, 2, stop. There we go. Sit on it, baby. And just wait.
Was at Costco yesterday. I had to buy it. Keeps hyping. Actually, really good. Surprised.
I've got an Arctic vibe right here, right next to my phone.
Okay, yeah, peach vibe. Okay, you bought this. Active.
Taking that small long out the door.
Yeah, really nice gap up IQs. That's the sort of shopping. And the videos, that's the time to call.
Small long.
Distribution.
That's it. Here to DD, double down at close. If we lose here, I'll long at hedge pressure back to close here. I got 2 different setups, so it's like here to there. I'll stop on this. I'll take a hedge pressure long here. Setup easy. Okay. Back to here. This will be trade 1. Yeah. So I use small buying power here just to go to DD if I get it. Hold on. Looking solid. Took that gap and go. This calls from Friday went 500%. Yo, that's nice, guys. I think Friday I made about like 2 grand on that trade. On the small challenge. Looks like Nasdaq's close to DD band, guys. So this is that one little spot here. Market is so bullish. Look, listen, we were the people last fall talking about market going to S&P going to 5,000 and 5,000 and further, and people said we're crazy. I even said we would go to 6,000 by 2024, 2025. Very possible. Okay. No bears in sight. No bears in sight. Dude, okay, let me tell you guys a question. This is why you're here, right? No bears in sight. When has this DD number ever gone below 50 this last year? 2 days in the entire year it got even close. That's it. Our shit is that good. You've never seen this number. This number has been 80, 90, 95, 90. Even during those 3 months of selling, the bears are like, market's going to crash. Market's going to. Did the market crash, or was it just a pullback in a bull market like we kept saying? What's the small account challenge out? It's like 11,000, something like that. DD ban on NASDAQ. I'll have to log into the CQG terminal and find out. Our balance isn't reporting accurately. It's a 1 day update. We have to write some code so that the balance updates on the platform in real time. It's like the small account challenge is like 11,000. Or whatever the 5,000 start. If I log into CQG, I'll do it after this trading session and take a picture. If we hit DD ban on NASDAQ right here just now. If I log into CQG, it'll kick me out of this, so I can't log into it. Oh, thanks, guys. we got busy with marketplace, so I wasn't doing a lot of trading, and I was traveling a little bit. So, and then we had a bad month, probably in that before market started rallying again. So it wasn't like didn't make much, didn't lose much. I was hoping to be at like the 20K mark by this point, but it is what it is. Res still negative. Yeah, we're getting close. And we hit DD ban on here. Yeah, let's be careful on this one. I'll take the first green candle. I'm gonna take profit. You're right. Res is negative. Let's just kind of hang on this one for a little bit. No VIX issues here. Where's that? Hold on. Res is trying. I don't get that scared when Res. Remember, we are at Triple B as well, guys. One more thing to take note of. Everybody, hit that thumbs up button really quick on the stream. Scroll down below. We tell you all this every morning. Give us some love to the algo. Leave comments too as well. We got to do all the algorithmic love. We're at Triple B. Remember, we're in the overshooting pivots realm still. Right on that edge of that one thing. Hold on 1 second. I'm good. I'm going to take the profit first. Hey team, we love the lives. Do out the gay like and retrace Beavis. Good job, Beavis. Love the channel transparency. Bravo. Question: what's the benefit of the Discord? Discord is where all of our education is. Couple things. Number one, you come here, learn, and scare the Discord. You can ask for help. You can start your training here. We have a whole curriculum on how trading with our platform takes place. How to use how to log into a brokerage account, all that stuff. All the tools, everything, how to do risk management, anything you think of. We have this huge curriculum in here. You go all the way through it and learn. Teach you everything I do, like right at the open. Why did I long? Why did I sell? Why am I worried? What does this yellow light mean? Right. And then we have reference guide for all of the tools. Anything we talk about, you'll have a thing here, like Matt talked about this BBB thing. What is this guy right here? Well, let's go to BBB and learn about it. This is one of the things I talked about today. Bull bear breakpoint. What is this thing doing? What are we exploiting? What is it? So you have any one of our tools, you have a reference, like a dictionary here, right? Sorry, encyclopedia here to help you. Bots and indicators, these are things that'll this is an overnight calculation that we do to decide if the futures market is showing bullish or bearish in the overnight before the stock market even opens. This is a huge part of our Discord. Do you guys like the overnight dynamic hedge pressure bot that that does, it's a dynamic real-time open interest model, which doesn't exist on planet Earth. It is doing its best guess to try to estimate what the real-time open interest is by calculating, using an algorithm, what it thinks it should be. And we calculate it based on a range, because you don't know until Opera releases those numbers. Opera releases them once a day to the world, as firms only report their positions at the end of the day to Opera after 4:15. So we attempt to guess what the open interest will be in real time. We have an algorithm that does so. And not even the exchange knows what the open interest of options is in full time. But from that, we can derive hedge pressure estimate ranges to where you know market's bullish or bearish. Example, last night, 4809, 4864. Okay. So last night. 4809, 4864. Let's draw those lines here. I'll show you something really cool. 4864. And 4809 is like way off of here. So what does it say? And 4844 was the hedge. These are the numbers that it gave you, okay? And what does it say? According to the rules, and the rules are printed year over year, above the high hedge pressure, overnight bullish pivot. So above the high hedge pressure, it's an overnight bullish pivot. Above monthly hedge pressure, it's a bullish monthly sentiment, okay? So it's a bullish pivot and bullish monthly sentiment. The market wakes up, you don't see yesterday's move and go, oh, let me short this. You see the move and say, aha, in the overnight, I'm only too long there. And if I'm longing on investing, we still have monthly long-term sentiment here. See how that works? So if anybody wakes up, at least on the Discord morning, you will know when the market has changed its mind and it's no longer at that bullish pivot, or the market is got bearish sentiment. Then you wake up in the morning, the DD number is greater than half. We're back to bull market in the mornings. 96% or 96 fraction, not a percent, but 96% yes it is, sorry, this is the percent one. 96% of the market cap is trading in a bull zone in stocks, so the S&P is likely to also stay bullish. All this bullish confluence today, so those overnights are also in the Discord as well. Comes free with your membership to our trading platform. And then additionally through here you get a few other things. You can market chat, people come here chit chat. No streaming. Yes, I'm streaming. What the heck? Oh, I was late, that's why. P&L, we have a Zoom call once a day. We're going to get back to that today. And then, of course, Ashton has his stuff. And then just a little bit all topic things, and then tech support if you need any help with the platform. The Discord is a really good informational resource. When we open up our marketplace, our Discord is going to be an educational hub for all things rocket scooter indicators, anything. When our vendors are allowed to sell their own indicators. Here's that DD band tap. This is how accurate our pivots are. Look at this. Look at this. Look at this, guys. Look at how cool and accurate this is. Let's see if we can find a NASDAQ trade coming in through here. See how this works? Let's look at NASDAQ. I'm not going to make it because make any trades there, but NASDAQ is shown. Index divergence light is on as NASDAQ is pulling below zero. S&P is not. Hold on a second. Look how good our DD bands are, guys. Y'all like that? It's accurate as crap. There's a thing that we're exploiting here. That to draw a line overnight that pivots on exactly where it pivots. That's exactly what you get from that Discord, by the way. Why am I taking a picture and think or swim? Come on.
I am really short on
Sorry, I was talking to myself with the mic muted there. Nasdaq's starting to look a little bit better. I said earlier the S&P tends to yank the Nasdaq around because it's more diversified as an index. The Nasdaq's starting to look clean again. Let's do the commitment traders this morning. What was I looking for? Oh yeah. Here we go. We'll do analysis of monthly maps really quick. This is you can get these cheat sheets also in the Discord. Let me show you how this works. I like to draw it like this so you can tell.
That next candle, it hit my eyes off it, and then I just checked it. Back on like this. I bet those contracts are nice.
Just have a little screenshot here. I'll walk you guys through what I'm doing.
I got in.
Okay, so what we're showing, guys, we love you guys. All right, don't forget, take a look at this. Good morning. All right, bottom bull side slipping down. Bulls are longing more between now and the middle of February. Bear side slipping down. Bears are exiting positions till the middle of February and probably even longer. So in the short term, remember we say after monthly expiration, you want to show up on that following Monday and see what the monthly maps look like once you get past that iron wall. Well, the expiration was last Friday. This is the new trading month. The new trading month is showing the market is still bullish and going to go higher. No, there's just a ridiculous amount of caffeine, like ridiculous amount. It's like drinking like. Dude, somebody on my stream was like, you should try Celsius a long time ago. I was like, what's that? They sent me a case. I was hooked ever since. So it's full of caffeine and crack, I think. Nice job, Mikey. All right. So anyways, back to here. Volatility decreasing, liquidity increasing. So the idea that there is no space between the bull and bear zone in here, this can be non-volatile as well, which means we're going to use that to predict what the VIX is going to do, which means we're going to use that right here and see that the market's going to be non-volatile going into the next couple of weeks. So we're going to predict that the non-volatile portion of this is going to have the VIX trade below triple D. So our pivots are going to be razor sharp. This is going to be an easy trading month, easy to manage trading month, because I'm going to use this to predict that we'll be below triple B in no time. You guys like how this works? So we're using this as a monthly map as a predictor. Now that's for the QQQ. Let's look at SPY really quick. It's going to be a really strong bull month, you guys. So unless there's a catalyst that comes out, SPY is in the same boat. Look at this. Bullish, short squeeze, non-volatile. How awesome is that? And look, those of you, that's why when you're trading this, you can see that all signs are good. That anybody here, question stream, not that I'm telling you what to do. This is not trading advice. I'm just some random scrub from the internet. I'm a nobody. Don't listen to me. Who longed and who shorted? Did any of you short today at all? Were any of you trying to short this market? Or with Rocket Scooter, are you seeing that all signs are bullish and you're not touching that short button? your old indicators, you used stuff before. Your technical indicators, you're like, maybe I should fade this. My RSI shows that the market's slightly oversold, and I just figured that, you know. Ooh. My Elliott waves and harmonics are showing patterns of bearishness. Hold on 1 second. My butterfly, triangle, snake, elephant pattern suggests that the market may pull back shortly. Some guy in my Discord with a Lambo said, buying puts in SPY. Is the trading month always on the 22nd, the trading month? What I call, now this is a Matt Howard term, what I call the trading month is a month that starts on the first day of the rollover into a new month, new front month of monthly expiring options. What is this guy saying? Monthly options expire the third Friday of every month on all equities products. And so the fourth Monday of every month is when I say the trading month starts, meaning that when hedge funds and 401ks and mutual funds and all these big groups that buy large amounts of stock at once are holding a stock, you're usually going to hold a stock for a quarter at a time. And let's see if you guys can guess why. Why would you hold a stock as a big firm and fund for at least 1 quarter? As you go to 3 months. Let's see if anybody can... Anybody know a little bit about how stocks work and why they would buy stocks and hold it for a long period? Why they buy your... Why when you give your 401k paycheck chunk to your 401k, why would they buy a stock and hold it for a quarter? What happens every quarter with stocks or some stocks? Not tax. Dividends, yes. Dividends. Dividends. And stocks pay dividends. You get free money for holding the stock. You're holding that stock on the ex-dividend date, which is the date of record that you must be holding that stock. Congratulations, you can get paid a dividend. So not only do you get appreciation of the stock value, but hell, some stocks will give you a bonus just for holding the stock. Hey, whatever they will also give you $150 a share. What? For free? No. Yes. So a lot of these firms and funds are not out there day trading your stock. The 401k, nobody's out there buying futures and shorting futures. They're out there loading up on a diversified basket of stocks trying to beat the index, right? And so they're going to hold the stocks quarters at a time. Because, you know, typically most firms and funds will plan about a month to a quarter out. They don't look too far into the future. And they're constantly always hedging against market conditions, dynamics, and selling if they need to. So what is a good instrument? If you have to hold a stock for 3 months, what's a good instrument? Say that I'm long some stock for 3 months, right? What is a good instrument that I would use to make sure that just in case the market looks a little wonky and I'm nervous, what can I do to guarantee that I've got some kind of insurance? Well, monthly options are what they're using. Monthly options. Now, there's weekly options that expire, you know, Fridays and Monday, Tuesday, Wednesdays for like the indices and stuff, Thursday, Fridays. But if I'm holding Apple stock and I'm going to hold it for 3 months, and I'm going to buy Apple monthly puts each month. And then when that month expires, I'm going to roll into the next one. And when that month expires, I'll roll into the next one. And I've always got insurance that I'm buying every single month for my Apple stock so that I can make it 1 quarter and get the dividend. So that free money from the dividend that I get from holding the Apple stock, I'm just gonna make up a number, $125 a share. I turn around and use it to buy insurance each month. I buy those puts with the dividend that I get. It's a great technique to cut into the price of buying insurance for the stock you want to hold for your client, just in case the stock market gets some volatile, there's some bad news. Does this make sense? So if the stock gives you free money, take that free money and turn around and buy some monthly puts with it. Now you can hold it till the end of the month and then rinse and repeat. If the market crashes, the puts buffer your portfolio as a firm that manages money. That way you don't got to go liquidate everybody because of margin calls. You got some buffer potential to, ward off a little selling pressure, etc. So at the end of the month is the biggest transfer of money to a new paradigm. Once those monthly options expire, the people that hold millions and tens of millions of shares of each company, these big firms and funds, will be moving their insurance to the next month. Expiration to the next month expiration. You guys follow? Answer DJ Boat's question. So at the fourth Monday of the month is when we start a fresh new month of sentiment. It's like the sentiment month, if that makes sense. So when you wake up on the first day of the trading month, which I call the trading month, starts when you roll into a new month, that whole procedure, you always look at monthly map that Monday and you always make that assessment. And you always see that between here and at least the 10th of February, we're still bullish. And that is what, three trading weeks away of bullishness. We got 3 weeks of bullishness, which means I'm buying on dips. I don't care how this market dips. I don't care if we get a day, 1 day or 2 day, I'm buying dips. You see how this analysis works? Pretty nice, right? We are still bullish for 3 more weeks. Pretty cool. So we use all of our tools to take note of that. The greater positional landscape is bullish with short squeeze and non-volatile. The current positioning is 96% of market cap is being hedged gamma positive and delta positive in bull zones. We're about to crush below triple B and VIX, which means we're going to get razor sharp pivots, dip to hedge pressure buy, dip to hedge pressure buy. This is going to be a fun, lighthearted, hopefully trading month with not a lot in the way. Now it is earnings season, which is great. Earnings is going to create some kind of volatility, but it looks like the market's not pricing in any expected volatility for earnings. VIX futures is at 15 and below is very non-volatile. So we get all these signs telling us the market's non-volatile and easier to trade, easier to manage. That's it. I'm buying dips. And that's what, we're glad you guys come to our stream every morning. Make that a little bit of fun. So there you go. Give me 1 second. I'll be right back. You like that, right? You guys like that? DD band, baby. God, it's such a clean pivot. Look how pretty that is. Yeah, that's that warning sign we had earlier. The Nasdaq resilience number showed that QQQ was going to go through a gap fill. Yeah, I would let it pull back a little tiny bit. Let me get the numbers really quick. But yeah, I think it's not a bear market, but any pullback into this territory is great. I told my team today, I'm looking at 419 QQQ as that rock solid head pressure support, and QQQ's already hit the finish line for the day. That 585 number, I tweeted it on my Twitter account. If you guys could take a look, this is our overnight resistance calculation called DD band. Hit it, turned around, pivoted. I don't think the market's going to sell off at all. I think this, our monthly map show it's bullish like 3 weeks into February. So this is going to be a really strong, non-volatile bullish month. So any pullbacks, I'm just looking for opportunities to get in and scalp up. QQQ, I personally would probably let it pull back a little bit more than here, and I would still long it, finish out the day, for sure, personally. Wait. Zone resistances, yeah. Let's go with Apple today. Oh my gosh, memories. Okay, with this being negative, this is going to want to go to here. So Nasdaq has opportunity here and here. However, we've already closed out the day. So what I personally would do is it was here. I always try to look at like where the market's stabilizing. This is a trick. So this is the completed move, right? So I'm not betting on anything other than the Nasdaq hitting this and topping out. What you can see is that if you could kind of draw a line, you see how that consolidation is moving like this, right? Robotically, the market's aiming to some area level. Why do markets have shapes and patterns like this? Because algorithms are out there trying to trade options, and options have a time factor to them. I'm sure you get these like Cartesian coordinates of time and price, right? Seems like people are hedging and balancing a market a certain way. Okay, looks like we're doing this. So if Nasdaq were to dip, my brain would say, aha, you know, it's probably going to come up to here, and then, you know, who knows what's going to happen there. So I look for pivots in this range, and I would say that, oh, okay, so if I get a trade from here back to there, that makes a lot of sense. Right, so like the initial trade at the open already took place, and we hit that. Russell DD band break to the upside though. That's actually interesting to see. Market being very strong and very bullish right now. S&P is very bullish. Nasdaq's not so much. Index divergence is slight. DD's still bullish. Everything's still bullish. So SPY, I would love a trade like this, to be honest, on SPY as the last one to catch up. Let's look at the commitment traders, ladies and gentlemen. Last little spot here. Thanks for tuning in. I love you guys. I love y'all so much. All right, let's take a read. Commitment traders, how we decide the market's bullish or bearish in the long-term futures market. Asset managers, let's go ahead and zoom in on here. Asset managers, let's get a green line here. Asset managers becoming, from about November until now, the long is becoming longer. They're about 927,000 contracts. That's pretty good. Hedge funds, which is the blue line. Hedge funds are becoming less short. Whenever they fan apart like that, it's definitely a very liquid market. Liquid, non-volatile. Liquid, non-volatile. Liquid is the inverse of volatility. So the more liquid it is, the less volatile. The more it fans out, the more liquid it is. On that note, you see VIX collapsing. That's that non-volatility that we talked about. And it's predictive. See, this, just like the monthly maps, is predictive of the state of volatility in the market. Okay. So you have liquid market. You have dealers very negative. Dealers negative to facilitate the abundance of buying. Okay. So when you look at this pattern, let's find other times when you had dealers negative and the market being liquid like this. Let's zoom out a little bit. Let's find waves of this pattern right here. And that's positive. A couple of these, yeah. Bull climb, bull climb. Liquid non-volatile market, dealers negative. Liquid volatile market, dealers negative because there's too much buying, too much covering. You're finding some more of them. This little section right here. You see a bull climb. Then it's the green that starts dipping that shows the selling pressure in the market. I teach so many classes on the commitment traders. I taught a lot of your favorite gurus how to use this tool, by the way, and read this. We used to give Twitter spaces on this, and once we showed this to everybody, people are like, we didn't even know this existed. They're like, oh yeah. So this is using futures, the positioning of futures, to try to find liquidity and bullishness and bearishness and where positions are to understand the market. And monthly map use options do the similar thing, but our options monthly map updates once a day. This updates once a week. So we get more granularity there. Here's another one. Bull up, bear down, red negative, and again, bull climb. Does anybody see a pattern here? Guys, when you use your elephant snake monkey pattern, backflip 360 no scope pattern, whatever garbage analysis shit you guys look at, or do you just want to look at actual positions? It's a simple thing right here. There's a pattern right here. When people long, markets go up. People long against the dealers, markets go up. People long against people shorting, markets non-volatile. Easy peasy. Very simple pattern. One of our favorite patterns to support the fact that we're in another bull month. That's why you guys come here. You want to learn how to read markets. Here's another one right here. From this market dipped here, and from this moment in time, bullish, bear splitting out, dealers negative. The same pattern, that dip recovered into a period of bullish as well. You'll see how this works? Just like that. I'll give us some love on the stream. I teach you how markets work and how positioning works. All right, you guys, just chilling on this. Y'all having fun? Mac D and Elliott Wave, bro, all you need, yeah. Trust me, when it comes to indicators, the more colors, the better. The more shapes, the better. As a matter of fact, got a bunch of crayons, tape one different color to each one of your hands, put your hands against a piece of paper, and then go into a seizure, and you'll create the best set of indicators money can buy. I always say the more shapes and colors, the better. Really, really exemplify and display your psychosis by using every color known to man. And when you run out, reuse the ones you already used to make it more confusing. Monthly matter gaps and daily zone. Important to adjust pivots. Daily zone. Important to suggest pivots. Should we just focus on gaps based on daily open and close? Bikram, let me try to understand your question. Sorry, buddy. Are gaps in daily zone, bull and bear, is important to just pivots? Can you give me an example? What do you mean a gap in zone? You talking about here? The moon is your birth sign. And don't forget to ask yourself in the morning, is there any evidence of sunspots and solar flares? Because, and have you seen any werewolves lately? Because that tends to affect the stock market as well. Do you occasionally wake up to hear your neighbor howling at the moon? You might want to short and buy some Tesla puts. Also, what's your horoscope? That's very important. Wall zones. Okay. Are gaps in the zones? Are you talking about here? Look on my screen. I'm talking to you directly. Are you talking about this? When you mean gaps? Or do you mean like... Are you talking about like if there's another bull zone above it? QQQ. Okay, let me look at it. QQQ today, 428, 426, there's a gap. 428? I'm on QQQ. Here's 428. I don't see any kind of gap. You're talking about walls. Okay. Oh, okay. No, it's ignored. Good call, good call. Well, okay, let me start over. We don't have any, we have nothing to suggest it knows anything. It could be something we've never investigated. That is being a resistance. Good question. Is 426 a resistance? I see what you're saying. So the way that our algorithm considers this, let me show you. Oops. Oh wait, that's fine, my bad. I'm like, where's 428? The way our algorithm considers it, it ignores it and considers it all bull zone. That's the way we built it. So right now, it's bull zone until it hits the highest zone in the pocket, or it hits a bear zone. As an example, if you go down here, 407, what the algorithm is concerned with is finding the split. So 407 being where bull zone is, the algorithm will consider all of this bull zone until it hits a resistance or hits a top. So you see how it's all considered a zone? Now the question you have is could each one of these be considered some kind of support or resistance, individual stronger bull walls inside of the zone? We've never explored that as a potential. We think that that would be in the realm of noise and not really useful, but doesn't mean it's not worth exploring. Because the algorithm didn't say, okay, 415 is an area of importance, 416 and all of these are. Is 416 a stronger support, as you were saying? The question is maybe there could be something there. Maybe, but this is just the reason that there's a zone here, not a zone here, is that the algorithm has decided that there's enough risk here for it to qualify, and there's not enough risk here. So it could mean more traders are there than here, but does that imply that's a stronger support? It's a great question, Vikram. And the answer is, There are strategies now. We don't know. We don't know if you can use that. Like what? Like if the market was falling here, would you buy at 416 because it would be considered the strongest resistance, and then stop out here and try again at 412, etc. Like, could you do that? And it'd be worth back testing to see if there's any potential to create a strongerness inside of the bull zone. Like, are there even better pivots inside of here? We consider the whole thing a bull zone though. As what a bull zone is an area where delta hedging will be positive, delta and gamma hedging. So anywhere inside of here, it's getting an upward push from calls that are in the money and bull zone, which means 407 is acting on it no matter where you are at. The closer you get to 407, the stronger 407 is going to be hedging. So the reason why we consider it all the same bull zone is for that very fact. That makes sense. Hold on one second. Right. So to finish what I was saying is that even though, like, will 416 and 412, would those be pivots? The answer is we consider them all part of a zone. So whether you're 416 or you're trading at 415 or 413, 12, 9, and 7 are still very strong areas of support that are getting some longing for those calls in the money. So yeah, it's great. It's a great question. So down the road, we could always, when our backtest module is built, create some more techniques to kind of dive into this further. That's a great question, Bikram. All right. Matt been with Roxy for over 2 years. Fast Summer, I don't talk much. It has been the best period of your trading. Oh, awesome, dude. Well, thank you for that feedback. Appreciate that.
Julia.
market looking solid here. And I was a super harmonics trader. Oh, lifetime changed your life. Thank you. Oh, well, I'm glad to hear that. Harmonics are very weak. Like any type of mathematical patterning in the stock market is absolutely weak. I've yet to find a single harmonics trader that can provide a 1-year broker statement to show that stuff works in the history of me doing this for a decade. I have an open challenge on my YouTube that's over a year, and I said I would give somebody a $10,000 trading account for free to trade with that they could show me a 1-year broker statement using technical analysis, and 0 people have ever responded to it. And I said I'd give them free promotion, all that other stuff. Not that it's terrible, but it's just not good. Any mathematical patterning does not work in the stock market. Never has, never will. Gurus just sell books. They used to use something called Fibonacci numbers. That's dog shit. Light waves, dog shit. No offense, guys. Any kind of, there's a pattern, a shape pattern. Shapes. Colors and shapes that make you rich when you're 3 years old. Scribbling in a coloring book, they're gonna make you rich in the stock market. This is algorithmic stuff. The algorithms trading the market don't even look at charts. You think all orders routed to Citadel goes to a machine and the Citadel's like, let's look at the chart. What is the chart? They look at pure order flow and supply and demand of the market. There's no algorithm even looks at a chart. Charts don't exist at the upper level. No, it doesn't. Like, here's an example, right? Just because I sell Coca-Cola and I also own the Walmart doesn't mean I'm not going to let other people sell their things. My opinion of the strength of my product doesn't mean that other products don't have some value to what they're designed to do. They just can't predict the stock market. That's what I'm saying. Let's preface this to say all technical indicators are good at something, but this particular statement is that harmonics, which is the art of drawing triangles or some crap and measuring angles between them, can never predict the stock market. As a matter of fact, no indicator can predict the stock market. That's what I've been talking about. Doesn't mean that they can't predict or not predict. It means they can't identify certain things, but they have to be defined correctly. You have to draw the box around it. The incorrect application is that the guru will tell you they go from negative infinity to positive infinity. They can predict in everything and help you with your trading, predict stock market, everything, instead of saying, you know what, this is only useful under these conditions, and then this pattern works pretty well. Example, rocket scooters bull long up is supported by the idea that each one of these lights are green to get maximum confluence, that this is greater than half, that the monthly map show that bullish setup. I feel like so the idea is that they can't predict the stock market, or nothing can predict price action at all. So even in the marketplace, just because I believe my style has an application inside of these boundaries, my boundaries are here, and the infinite spectrum of whatever the stock market is with all infinite conditions, and I have a system that works right here. It doesn't mean people can't have technical systems that work there, there, and there. This is from 0 to infinity of all conditions and prices. But what's incorrect is somebody says, well, I have a trading system that works everywhere at all times and can predict the market. And that's just silly. And what will happen in the marketplace is we will regulate what you can and can't say in your sales pitch. That's the best part. Like, you can't go violate regulatory law by saying, I have something that's going to predict the stock market and things like that. People won't be able to say stuff that's incorrect. It's going to be an honest, fair marketplace. Yeah, that's the difference. So the idea is that triangles and shapes and colors can't predict the stock market's direction. As a matter of fact, no indicator can predict the stock market direction. As a matter of fact, our indicators can't predict the stock market direction. So in that statement, all indicators fail, including R's of predicting the stock market. Nobody can predict the stock market. At best, indicators calculate odds, and R's do a great job at calculating odds and are repeatable. It doesn't mean that it has to hit that and resist every time. It hits this and goes here. But there's a certain degree of odds, like what are the odds that it breaks or doesn't break? I'm going to make up some random numbers. Is it 75-25? Is it 80-20? And these are helping me calculate my odds in a very clear and easy to find way. So ideally, any system that's sold or purchased by a person should come with conditions inside of that infinite spectrum, like where in the infinite spectrum of conditions and the range of 0 to infinity in price, where does my system work well in? What set of conditions? It works under some conditions, but technical analysts will apply their indicators to all conditions, which an example of a condition is when we know an event is coming up, like for instance, FOMC interest rate decision. I don't trade within the first 30 minutes until the press conference come out. There's a condition. The condition is, if not this 30-minute window of Fed, then proceed with your tools. So my tools turn themselves off in that window. So any system works if the right conditions are applied. The problem is you just see some yokel slap 100 colorful triangles on a chart and they say this is predicting the stock market, and there's no conditions to go with it. What's the volatility? Well, what range of volatility does it work in? Does it work at the beginning of the month, end of the month? Does it work in holidays? Does it work at all times? Does it work when you're sleeping? Like those kind of things are like, it work all the time, guys. Here's a signal, here's a signal, here's a signal, and it's just over trading noise. And most of them are just noise trading vehicles. They're just trading noise, like chasing every little price move like it's meaningful. And so the difference is that you have to have a conditional application to any trading system, and any trading system will work under the right conditions. The trick is not just slapping indicators together, it's finding the right conditions in which they work strategically. And you know how I know somebody doesn't have that? They don't have a strategy on when to sit out. When any of these lights are red, you'll usually see me sit out. So when any of the conditions are flagged, I don't use my tools. So this is that box in the infinite spectrum of conditions that we've chosen to apply our tools to. And that's kind of the difference, right? Okay. So the idea is that shapes and colors, the joke is, can't predict the stock market, but it can predict something. You just have to define what it's going to predict and under what application. And then you're going to use empirical data analysis to find a probability. For instance, here's the probability of our stuff. This is a probability. One of our members randomly surprised us with a 6-month back test, trying to call bullshit on rocket security. He goes, you know what? I was literally trying to find a flaw in Matt's math. Matt used to teach us this 96% number and said if these lights are red and green, sorry, green or yellow, and you open in a bull zone, 96% of the time you close in a bull zone. And that's fantastic. It can go down and up, it can go flat, it can go up. But 96% of the time, it doesn't go this low. So you can sell puts down here, and 96% of the time, they don't strike in the money. How about that? So somebody was like, I want to call bullshit on that. Now I'm going to secretly monitor this for 6 months and see what it is. And the person that reported it, it's pinned in our Discord, a trader who doesn't work for us. He's just a very, very, very smart guy. Came up with 96% as well under current conditions. So under those conditions, it's a very strong probability. It doesn't mean you're going to win 96% of your trades. What it means is you have very strong confluence between these conditions and that particular role, the bull zone bounce role. Does that make sense, everybody? Yes? Are we all following what I'm saying? So it's not just like I have an indicator, use it, right? If you don't have the conditions, you'll buy that bull zone every time and you won't know when it's its strongest application. If the lights are red, I don't buy. So any one of these conditions, we've identified that 96% probability just kind of goes to shit. You don't know what it's going to be, and it's random, right? So a stronger trading system will know when to apply itself. I'm going to buy here, but only if A, B, C, D, whatever are true, okay? Because when those are true, I have a probability that historically in a back test, it's when it works. So what happens if C isn't true, but A, B, and D are? Well, it's probably not going to be that high of a probability, but what is it? We don't know. And our backtest module maybe allow us to create more specific probabilities and print them on the chart. But the idea comes down to, well, maybe it's still greater than 50. As a trader, all you're trying to identify, you don't want to be exact on these probabilities. What you're looking for is edge. So you're looking for anything above 50 or anything below 50. How certain am I that it's still above a 50% chance and I still have an edge? 51 is an edge, just like 96 is an edge. They don't mean 50% of trades you'll win, 96% of trades you'll win. What it means is anything above 50% is like you have an edge over the house. Rowan, we're not irrational since the Nasdaq touched. We just ended the day. And so when the slide is yellow, it means any trace from here is half of what you normally would do. Like go at half pace. Don't go full aggressive because Nasdaq already completed the picture. That's what those yellow lights mean. Somebody's a super harmonics trader, lifetime changed your life. Again, thank you. You know, the guy who taught you harmonics was going to try to out trade you. Yeah, what happened to that? He is in Scott Arnie's camp. I stopped after that after he had lots of losses. And they never challenged you. I feel like a lot of people say that they want to challenge me because I have a spotlight and, you know, I have a YouTube show and they just want to attach their name to ours, but then they never step up. I'd love to do any challenge. It was a long time ago, Tracy, Matt, and I actually joked around about having we were actually somewhat serious, a charity challenge where we would try to out trade each other for fun and like a little 1 month contest and then donate everything to charity. We talked about that a couple years ago. But him and I we both got busy. We never organized it. But that would be fun because Matt's a buddy of mine. So he's pretty big if y'all have heard of him. Somewhat. But other than that, like, you know, there's a ton of people that would never step up for a challenge. I still think me and Matt should organize that. That'd be fun. And get a bunch of our trader friends together. Get like 20 of our influencer friends and have a giant trading challenge, and then everybody put like 10K in a pot, and then whatever gains you have, you know, donate it to a charity or something. That'd be hella cool. But I'm just gonna tell you guys right now, the stock market, for the most part, in between events, which are going to be like news events or things that are causing dynamic shifts in the market does move systematically. We've proven that. I mean, everybody knows what delta hedging is. Delta hedging causes the market to move because there's just the wind blowing on it from calls being in the money and puts being in the money. You can mathematically calculate the amount of pressure pushing on the market because you know how many calls are there and how many puts are there. You can calculate how many shares are going to be bought against the ask. Like if the ask has 1,000 shares and you've calculated right now, if everybody are balanced and neutral, they're gonna have to buy 6,000 shares. You can calculate that pressure is going to overwhelm the ask and continue to go higher. So you can calculate things like hedge pressure and other calculations we have can calculate pressures on the market, but it's still not predicting the stock market direction. An example is a bull long up. It's going to predict that there is an upward pressure at the open price, which is the black dot, and you see there's an upward pressure from the open price. As you get near it, it's just floating off. It doesn't mean it has to bounce every time, but that's 1A, open to some resistance. 1B is if it dips the hedge pressure, it's going to get a very strong blast of pressure there as well. So when I look at it, I say, market's probably selling off. What should I do here? Probably nothing. What I'd like to do is very clearly is that is a really strong trade right here. Oops. Because I know that I'm going to get a really strong wave of pressure here. Confluence is, at this mode, those lights will still be red and yellow. DD is still really positive. Monthly map's still good. Bullish, 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 bullish. So why don't I take my strongest bull pivot? Because I know at the split, it's definitely bearish here. So I know with like very high certainty where the bull trade stops today. So always in the back of my mind, I know at 480.5 on SPY, I'm a long market. Does that make sense? You've been here since the K Fatty days? Aw, man, I miss Kevin. Didn't they just they had a baby last year, right? If I can remember correctly. How's he been? I haven't chatted with him in a hot minute. I caught up with him middle of last year. Oh, UVXY, let's go. Jesus saves, let's go, baby. Yeah, all the best to K-Fat. He's a quality dude. I really like that guy a lot. He came up to me and he goes, hey, I want to review Rocket Scooter, but like, honestly, like, I'm going to check it out. If it's shit, I'm going to say it's shit. If it's good, I'm going to say it's good. I was like, oh, okay. And he just, this is when we first launched the platform too. He did it like in August, I think, and when we launched in the September. Yeah, he had the beta version. And I was like, okay. He's like, is that okay? And I was like, yeah, that's totally cool. And then he gave a very honest review series on using the platform. I never heard of the guy. He just reached out. He's like, yeah, I'm looking to promote some new things on my channel. And you guys, I hear a lot about you guys and y'all seem like y'all a cool deal. And teach me how it works. I'm going to use it and I'll just give you guys a little review on it. You found us through K-Fatty, chat with him many times, and now your neighbor a few months later. Exactly. You've been here since then. You and him came from Tradie Ticks. Ah, yes, I know the Tradie Ticks team. There's some good folks over there. Good peeps at Tradie Ticks. So you see how right now the market's selling off in bull territory, things looking, and yeah, you did say, look, UVXY, there is that limitation of the upside trade as well, right? We hit DD ban and we have that bull zone rule on UVX. So as you see, none of us, like, I took a long and got out pretty quick for a couple $100. So this is great. Let's look for some dips. Okay, so SPY, watch this, hold on. Oops, let's look at QQQ for bounce points. Let's get a trade on S&P. Let's get ready for it. I'm gonna get a scalp off a half cap. Okay, resilience is still really strong on the S&P. Okay, let's take a little scalp here. Again, I'm only trading 5 micros. It's very small. I'm gonna try to scalp from here to here just to get that. About a 10 point. Maybe 8 points. I know, right? It's starting to look pretty sexy here. Resilience is still pretty strong with no irrational signals, so at the resilience roll. Let's pull that up. Resilience bullish, rational, half gap as support to upper part of the box. This is a decent scalp right here. Let's see if we can get it. We get the turn of the hour in about 11 minutes. So I'm going to wait for this. This will probably dip a little bit more. We're not going to get a lot of overshooting of pivots. Well, actually, no, hold on, we will. We might get overshoot of pivots because we're still below triple B. So we might get something down in here. But as long as res is greater than 0, I'm going to play all the way through here. And I'll stop right here. I'll take one spot here. I'll take one spot here. Just to get a little bit of a scalp. Something small. Let's see. Tomorrow I'm gonna have the camera on. Get the camera back on. Been redecorating the office for some time here. It's gonna be fun. Means I'm gonna have to get up and put pants on, I guess, in the mornings. Can't just sit here with my junk out anymore. Comb my hair and look sexy. Start making my Botox appointments again so I can look camera ready and pretty. Just took a long scalp on the S&P. I went long at 48.81. Just S&P, just to go for about 8 points. That's it. Just 8 points. It's just scalping on the way down. I don't want to get. Yeah, like 3 green candles since then. That's pretty good. All right, take it. See how this works, guys. Right up here. At 484. Let's go another point or two. Failed to get tick size error. You've logged out and logged back in. DJ Boat. Which broker are you using? Edge Clear? Are you using like Philip or Dorman? What are you using? If you don't mind, take it to tech support and see if Slacks can help you there. Philip thinks, yeah, don't post in there really quick. Yeah, S&P, we have this aggregate number called resilience. It just looks at the flux of stocks through their gaps, and when stocks gap up or down. It's market cap weighted, so it's currently on a scale of negative 100 to 100, it's 24. So it's slightly above zero, which just means like the net sum of market cap is still trying to hold their gaps and not fade them. So I use that as arbitrage with the S&P. The S&P is selling off, all the stocks are holding strong. I usually like to take a dip, scalp, just like I just did. I'm not looking for the market to reverse, but it's a really small play and just betting that the S&P doesn't collapse on itself. And I got a stop loss pretty close, not too far away. Wrong. The R&R is pretty decent on it. And Macy's, no, why? Oh, bro, I got the lo-fi, the lo-fi copyright-free streamer music going, baby. The no royalties, yeah. I don't want. I mean, I need my $3 a day I get from my stream. You know, big monies. Gotta do the copyright-free. Yeah, or send you an email and says your monetization has been shared with the creator of the content on your page, and I'm like, oh, I'd like to give the lo-fi music maker my $3 for making the awesome music. Yeah, I'm on YouTube.
Oh, yeah.
YouTube, yeah, YouTube just gives your money to whoever wrote the music. For SPY, CBE extend beyond the New York Stock Exchange 9:30 open. John Offload, does official open time for SPY? So okay, so SPY trades 24/7, but what they call the equities open is at 9:30 a.m. Eastern. You've had a problem placing market orders at the open through Fidelity, not accepting market orders just after 9:30? Really? That's really odd that after 9:30 you can't place a market order. If it's 9:30 Eastern, John, your order should go through. What I would do in that case is I would call Fidelity and ask them why. They may have some technical thing that prevents that. It would be on their end. It's not a stock exchange or regulatory thing. Yeah. So the answer is to call them and ask them, hey, what gives? Why can't I place a market order within a minute of the market opening? And then have them, you know, the brokers will maybe have an answer. If they don't, have them pass you around until somebody has an answer. Because you should, now it just be, they may limit the ability for you to do that, just maybe so that you don't overload their servers. Maybe Fidelity's not a day trading, you know, enthusiast broker. So maybe they're not catering to day traders like Thinkorswim would be, or TD would be. So maybe they don't just want people overloading the server, because Fidelity is typically used for investing instead of aggressive day trading. So it could just be they go, oh, well, we don't let you make orders in the first minute because we notice that crashes our weak servers or something. They told me to pound salt and blame it on CBOE rules. Well, that broker sounds like a fucking moron. Whoever said that. Unless CBOE rules have changed that you can't trade the SPY within a minute. Are you trading SPY shares? Now that may be something that I don't know, which I'd like to be educated on. Why? I don't think CBOE would introduce a rule that limits trading its products. I would believe that they would create any rules they can to maximize the throughput of selling these products to you. Oh, options. Okay, let's start over. You said options, didn't you? Okay, you said SPY. I assume you meant shares. Okay. SPY options. That I don't know. I wouldn't think the options market again would have any limit, but it might just be, as long as the options market has liquidity, a quoted bid and ask, you should be able to supply a market order. Now, a lot of times with these options brokers, I've noticed that even though there's a bid and ask, you don't get filled immediately if you try to market order against the bid and ask. So I've noticed that with Webull. So maybe there's something in the options world I don't know. I'm not an options super expert. I'm just an options baby expert. Right. They set an open time once bid offer established post open. And a lot of times with options, they'll establish the bid and offer a little bit after market opens. I've noticed that as well. And that's with multiple brokers. And I don't know if that's just a options markets are less liquid than the stock market. So I think that maybe if, and I don't know if there'd be a regulation, you guys will have to teach me. I don't think they would have a regulation that would limit your trading, but maybe they do for liquidity purposes and stability purposes. If so, then that's a question for CBOE. You can probably get to their help desk and see what the rule is if you can't figure it out online, or Google it and let me know, because I don't really trade options that much. So I certainly don't trade options right out the door to ever experience a rule like that. So that goes outside of my expertise. If I were to guess why they would have any kind of limitation, it was just to establish a bid and ask so that the market is less volatile at the open. And volatility, and so if you think of like an exchange, their goal is to sell you as many products as fast as possible. That's how they make their money. So if there's a rule that limits you doing something, believe it or not, in some way, shape, or form, it makes them more money. So an example is if they disallow you from trading for a minute, because if you go in and major hedge funds and firms start slamming the bid and offer the minute in and make the market extremely illiquid and hard to establish a bid and ask, then it becomes volatile and illiquid for the next couple of hours. Right? So you trade less. Volatility means fewer traders are trading at the current price. Market's less liquid, more volatile. So if it's a volatility prevention mechanism, it ensures that it establishes liquid trading, which means maximized purchasing of things. So I would say that if there is a reason for that, it's to prevent the market from becoming insanely volatile at the open. You know what I mean, John? Because the options market is a lot less liquid than the equities market for sure. You need some market makers to step up and start quoting that thing. Maybe they just have a minute rollout for their products. That would just be for the exchange would control when they list quotes, because that's the job of an exchange, to list quotes of a securities product. So the exchange would have their own rules that aren't regulatory. So CBOE would have rules how their products are traded. You would have to go to the CBOE to get that answer. So it would only apply to their own particular instruments. And then all the other exchanges would have their own rules. So in options, unfortunately, that goes. Maybe Ashton might know. I don't know. Have to guess the limit order price and hope for a fill. So essentially the market, so you can still get filled if you buy from the ask. Essentially, if you set a limit price and you can buy a limit order at the ask, you get filled. But if you hit market, it doesn't fill you. Yeah, it could be something with that. But if you want to go on a scavenger hunt today, contact the CBOE and figure that out and share it with the group. I'd love to know. That could just be a thing they do for SPY, and it would be SPY, QQQ, SP. Well, actually, no, it would be yeah. Find out. Let me know. I'd like to know the answer to that. I would love to see S&P move a little bit. Is that half gap support we were looking for? I'm on another Investing Space podcast. Pardon me. Do I do one-on-one consultations? You mean like trading coaching? One-on-one? Is there asking? DJ Boat. 45. Yeah, I think I'm in the same boat as you. 45 target fast. So here's how this goes. I don't, but I do, but I don't. What I mean by that is, Rockseer doesn't. I don't do private coaching. I know a lot of gurus and trading mentors out there love doing private coaching. They like to make as much money as they can selling services. I don't. I make a lot of money. So my time is extremely valuable, so I don't do any coaching. Not that I don't want to, but sometimes people just need that coaching. They're like, but Matt, I really, really would love, I'm a Rocket Scooter member for life. I need some coaching. I really just want to enhance my experience. And because I'm a friend and I care about everyone here kicking ass as much as possible, I will coach people. A long time ago, I used to have like a one-on-one coaching thing, and it just was a whole lot of time. I'd make like, you know, 3 or 4 grand a month extra, and I'm like, it's really just money I don't need. I'd rather have my time. So, but people really want the coaching, then I say, okay, I'll do it. But if I do it, it's extremely expensive to make the time worth it. So that keeps people from doing it. Does that make sense? So it's like, yes, if you want it, you're gonna have to pay for my time, like a personal trainer, right? For training you at the gym. So it's usually too expensive and most people can't afford it. So therefore it keeps you from doing it. But if you need a session or two just because you want to learn the platform, I'm glad to throw it in for free, dude. So that's how it is. Yeah. Like if you want somebody to coach you for a month, I'm gonna charge you like a lawyer will charge you, like $500 an hour. But if you want like a session or two to learn Rocket Scooter, man, don't even pay me for it. I want you guys to succeed as much as possible. We usually have our Zoom calls at 3 o'clock, which is typically being considered a one-on-one coaching sesh because it's small enough. There's like usually 100 or fewer people in them. It's small enough that you get some one-on-one FaceTime with me there anyways. So, and that's free. Just don't. So that's an awesome answer. So the answer is I don't, but I do, but I don't. I don't is because it's not on the roster. I do because people will want to pay for it, but I make it so expensive then they don't want to pay for it. So then I ultimately don't ever do it. Yeah, $500 an hour if you want. But here's the trick. Go to the Zoom calls. They're free. And then just talk to me there. Save yourself the money. But there's people that are like, dude, I don't care. I'm rich as fuck. I want you to be my mentor. And I'm like, oh, okay. I do it because I want them to succeed, not because I want to make some extra cash. I really like seeing people use rockets here. Like I scroll up in the comments here. I'm just reading Faster Plumber. Been here since, you know, people are saying I've been here. This changed my life. I now have risk management. I'm really good at, you know, this and that, or I've done better at this and that. Lifetime changed my life. I'm reading the comments right now. Like these are things that make me happy. You know, I built this to have people have the ability to have risk management in their diet and be in control of their own trading and destiny. Not just out there throwing money at random shit. No guidance. And it makes me happy to see people say, I am doing something different. I've improved something or I've learned something. And that's why we built what we built. And to me, that's the victory. So if training helps you come to a better conclusion and, you know, you're a happier client, that's what I'm here for. For the Zoom calls. So every day, and now I haven't been consistent the last month because we've been really overboard with the marketplace stuff, but it'll be every day at 4 o'clock Eastern. There's a Zoom call channel in the Discord, and I just put a link in there and we do like a Zoom call. I'll do like coaching for the day, like what I did, what my trade plan was. Sometimes we'll teach a lesson. You can get all of our video lessons that are on the website. Those are usually recorded Zoom calls that we just post on the website. But usually we'll teach a lesson, whatever is relevant. Today we'll talk about the monthly maps and the switch over to the new month. I'll talk about the scalp that I just did, you know, some of the trades that I'm trying to do, why I did what I did. So DJ, if you want to do it, like you're like, I don't care, I'll pay for it. I want your time, Matt. That's what it is. It's $500. So just come to the Zoom calls, and they're $0 an hour. See, there's our honesty here. I even tell you how to cheat our own system. Don't pay for it. And there was a time when it made sense, when we had just like a few hundred people, and you know, I'm like, oh, okay, that's nice. But we have like 55,000 something user accounts. Like, I don't have the capacity to train people anymore. Yeah, just come to the free Zoom call, dude. And just ask me questions. That's why I always tell people, like, I'm like, the Zoom call is not a lecture. The Zoom call is like you all coming into the teacher's office and just hanging out and let's talk trading. Ask me any questions you want. So the answer is I don't, but I do, but I don't. And then there's a free option anyway. It's kind of free-ish. But some people are like, I want private coaching, like me and you on the phone for an hour. I want to talk to you about everything I'm dealing with. I want to confide in you about the mental problems I'm dealing with. My wife's divorcing me and I'm running out of money and I'm desperate. I'm trying to figure out what I need to do. So some people will want privacy, and that's where that consulting fee will come from. But when's the last time I've done private coaching? I can't even remember. 3, 4, 5 years. I don't do it. It's good to have a coach, though. It's just like I have a personal trainer coaching me at the gym. It's always good to have a coach. What my personal trainer does that I can't do, I can go into a gym and not pay $100 a session, which is what I do. I can go to a gym and grab the weights and start lifting them. But with the trainer, like what she does when I'm lifting weights, she's like, okay, now put your foot here. Now straighten your leg. Now keep your back straight. You know, it's like adjusting me like a yoga teacher would adjust you, so that you have proper form, so you're isolating your muscle and getting the most bang for your buck. So if I'm like, I'll pay $100 a month for a gym membership and get 10% efficiency because I'm doing the workouts wrong, or $100 a session to get like 100% efficiency, so I could do less and get more. So with a coach, you're trying to get more bang for your buck of whatever they're coaching you on. So a coach should get you somewhere faster, to give you guidance with their wisdom and teach you things that you don't know, right? So an example would be, you want to learn rocket scooter faster, private coaching would get you there faster. The Zoom calls are also really good. But a coach is going to help you with your form and your problem, not just teach you what's already available. And a lot of people out there, as I've learned from my clients telling me like feedback, there's a lot of coaches out there that are just garbage. They don't coach. They just reiterate the lesson plan. They show you the indicator. They teach you about the indicator. They're just teaching the stuff. It's like you can get it from the textbook. The coach is not supposed to reread the textbook to you. You can do that on your own. If you're paying for extra, they need to bring wisdom to you or give you additional things related to your form. Like a coach should study you and find out what you're doing and help you with what you're doing. If you pay a coach and they're just teaching you a lesson plan, it's not really coaching, right? So when I would coach you, I would be like, okay, can you give me like 6 months of your trading history? I want to, before I start working with you, I want to see what you've been doing. And I'll try to identify form mistakes. Like my trainer would say, oh yeah, your shoulder's hurting. Well, because you put your arm, you twist your arm the wrong way when you lift the weight. I already see you do it. So I can see, like, does this person have any major fundamental flaws that I can notice right out the door? Oh yeah, you add to losers and you keep adding the losers and you keep adding the losers. Okay, so let's start somewhere. Let's work on this. And why are you adding the losers? What psychology, what are you dealing with that makes you want to do that? Let's coach you on that particular thing you're doing. And so DJ, if you're looking for somebody to coach, make sure that at that capacity, you're black and white, good coach, bad coach. If they ask you what you do and they study you to help you with you, that's a good coach. Bad coach is going to be like, yeah, sure, sit with me. I'll teach you some lessons on how to trade. And they just go through and regurgitate some rehearsed spiel about, you know, a lesson of they're trying to teach you something. That's not real coaching. Don't pay for that. You can get videos for free on YouTube on trading all day long. So a good coach will study you and your behaviors and try to figure out what you're doing wrong and work on one specific thing with you, right? Does that make sense? Just like a personal trainer would, right? So that's my advice when looking for someone to help you. And our Zoom calls are pretty cool too. I don't do any coaching in the Zoom calls because I don't ask you guys about yourselves. But I'm there for you to ask me questions. You can ask me questions about yourself if you want. And like, hey, I did this. Is this right or wrong? What do you think? That stuff. All right. You know, I'm going to call it a day. We did close the gap. Let's flatten it out. That's another $100. It's already 10:30. I had to finish decorating my room for the stream tomorrow. Let's call it. Not a terrible trading day. I think what I made like $200-300 somewhere in there. We're below triple B on the VIX. Market's looking great. Let's call it. I'm about 30 minutes over when I usually cut this. Remember, Rock Scooter teaching you risk management quantified. Show you where market makers are positioned, large investment banks are positioned. Show you where that underlying hum of the market is, where that pressure's coming from. There's some math to it. Your options exist, order flow exists, and we figured out how to show that to you. And we give you some really cool tools inside of our platform. You guys want to check out the Discord? Go to the description below and check out our Discord. Don't forget the thumbs up the stream if you like the content for you every day. And of course, before we try our extended trial Rock Scooter, 3 months for $79 a month. Pretty nice. I get to play with all our tools, just see if it's something for you and add some risk management to your diet and some rules to your diet. Like I said, you learn something. I promise you that much. You'll at least learn something here. So give it a shot. We love to see you guys. All right. H Patel, super happy you purchased lifetime. Oh, thanks, man. All right. We love you guys. We'll see y'all at 4 o'clock. Bye-bye.